What's up, guys? Welcome to the mini course on areas of value. See, areas of value are one of the most simple ways to get you in and out of the market, but there's so much more than just a strategy. Areas of value represent confidence, okay? They represent a trader that is not navigating based off emotion. It represents a trader that doesn't just FOMO into the charts. Areas of value give you understanding. It gives you structure in an insanely unstructured environment. And today in this mini course, I am going to teach you, I am going to show you how to trade them in the most effective way possible. Let's dive right into it. Lesson goals: understanding market structure. Market structure is one of the most beautiful and effective ways for you to understand price action. The market communicates to us in many ways, and the market structure tends to be one of the most clear and effective ways it speaks to us. So we're going to be diving deep into market structure. Number 2, identifying areas of value. Once again, this is just another tool for you to effectively identify great opportunity. Okay. Number 3, the most important part: how do you actually make money off this information? Because there is endless information out there on YouTube, but very little of it actually helps you become a confident, controlled, and convicted day trader. So we are going to be covering all 3 of that. So for the sake of time, yours and mine, let's dive right into it. Understanding market structure. Market structure is basically the language of price movement, okay? The roadmap that shows us whether buyers or sellers have the ball, okay? Based off current imbalance of order flow, the market will maneuver in a manner that leaves us clues to the current direction of future price, okay? And just like this example you see, market structure is basically a bunch of break and retest, okay? And break and retest is such a phenomenal way for us to understand who's got the ball, okay? Buyers got the ball right here. Buyers lose the ball right here. Buyers bring price back up and stop out of their trades and cause price to move downward, okay? Market structure serves one major purpose, okay? I don't care what anybody else says. Market structure serves you one major way, and that is primarily for us to learn to identify healthy market conditions and unhealthy market conditions, okay? To become, anybody can make money, okay? But show me the trader that knows when to actually participate and when not to. I don't care if you make $1,000 on Monday. If you are just shooting in the market on Tuesday and it's unhealthy market environment, you are going to lose that 1,000 plus another 1,000 and another 1,000, okay? It's not about making money always. Most of the time it's about saving it, okay? And this is going to help you do that. So key insights about market structure: they help us identify healthy market conditions. They help us recognize unhealthy market conditions. Number 3, they help us understand the market dynamics and how it inherently operates, okay? It doesn't do this because I want it to. It doesn't do this because it wants to. It does it because this is how it operates. This is in its nature, okay? The market's nature is market structure. It's either clear or it's unclear. We need to understand both. And number 4, most important part, it supports decision-making process, okay? Once again, there's massive amounts of information out there. We need to focus on the information that actually serves us in a consistent fashion, okay? Red bar ignored, green bar ignored. You guys know me on YouTube for the HPT cross, okay? And this is the 3rd and most important step of my strategy. I will not, I repeat, I will never enter into a position without an RBI or a GBI. Let's break them down. So as the auction continues, there is going to be a constant battle between buyers and sellers, right? I want you to think like they're in the ring. Buyers just land an uppercut. Bam! No, sellers dodged it. And now they take buyers down to the ground. It is literally a battle at all times, okay? And once again, this often leads to very erratic price movement, okay? So the RBIs and GBIs represent one side of the market taking control of the auction, resulting in healthy trends and structure that continues, right? Let's focus on that, okay? So we got this battle, okay? We got buyers versus sellers, right? And they're battling it out. And until dominance has been formed, okay, the market is in unhealthy environments. But once the RBI start popping up here, red bar ignored, that's a long play, okay? Red bar ignored, that's a long play, okay? Once the RBI or GBI is formed, we now know it is safe to participate. If you take anything from this lesson, let it be unhealthy market conditions, conditions that blow your account and blow your ego and your soul. Unhealthy conditions come from environments and markets without RBIs or GBIs, okay? Good price action, you making money, that comes from markets that have GBIs and RBIs, okay? These are entry candles. These are very important levels, information you need to be acting on, okay? RBIs and GBIs tell us exactly where to get into the trade, as well as exactly where to exit the trade in the event the conditions are shifting. If the market had a language, and the RBI would literally mean get into the market or get out of the market, okay? When you see this candle, whether it's red or green, being ignored, you now know one side of the auction is stronger than the other. I don't want to waste too much more time on this because I covered a lot of the RBI and GBI in the mini course on my strategy. So if you guys want, go back, rewatch that so you can get more familiar with the RBI and GBI. But it plays a very important role in identifying the area of value. Okay? And it's very simple. It's literally when you see a red candle, let's just say the high of this candle is 100. When the candle following it hits 100.01, the bar has been ignored. I don't care if it's by a penny, and I am definitely not waiting for the following candle to close. Once that candle breaks the previous candle's high, we now have an RBI, okay? Key insights from the RBI and GBI. 1, they help us identify precise entry points for positions. 2, they help determine the exact exit points when conditions shift, okay? And number 3, they monitor shifts in trading conditions very closely, okay? So when you are seeing them, even if you're not in a trade, they help us understand who's in control. Okay, so now that we've gone over all that, market structure, RBIs and GBIs, okay, market dynamics, all that good stuff, now I present to you the area of value, okay? So the area of value, what are they? AOVs are key zones that are created as soon as the RBI or GBI is formed, okay? I'm going to say that one more time. As soon as you see an RBI or GBI, every single time, this is what I teach my students, you draw a box around it and you pull that box all the way to the left or right, okay? These zones contain great opportunity for pullbacks and entries. And I just changed your life, okay? Once again, these zones mean so much on a psychological level. Let me explain. So when you're getting this green candle, what do you think is happening? Well, to be very simple and clear, once this green candle comes into the market, it represents buyers. Once this red candle comes into the market, it represents selling. What do you think these buyers are going through when this red candle comes in? A lot of mental pain. Okay, we've all been there. We all entered into the market just to be in a losing position minutes after. But the thing is when large money, when banks, institutions, when they're entering into positions, they can't just get out of them. Okay, there's not enough liquidity. That's why these RBIs and GBIs tend to happen at key levels. Okay, previous day high, end of day, open print, previous day low. These are pint numbers, critical levels. These levels have way more volume than other levels. So back to the example here, these buyers are in losing positions, and once price comes back to their entry point, they go, thank you God for giving me my money back, I'm getting out of this trade, right? So what do buyers do? They sell their shares, which adds selling pressure to the downside. Every time you see this, it is literally representing large money getting stomped out of the position. And that is exactly what I want to be putting my money on. Okay? So, key, very important. As price pulls back into the area of value, we look for the dominant force to defend this area. That would be sellers right here. Confirmation is followed by, you guessed it, another RBI or GBI. Okay? So let's just bring that back, slow it down, and dumb it down. Guys, when I see a green candle being ignored. I draw a box around it. When price comes back up and retests this zone, I am going to be looking to identify another GBI. Okay, that right there would be a green bar that got ignored. That would be a solid entry. But say, Josh, I missed it. I was walking my dog. My girl was talking to me. I missed it. I was just too late. I hesitated. That's fine. Wait for the retest of the area of value. And guys, that right there would be your short entry, followed by another GBI. Okay, see, this is how the market moves. When it's in a healthy environment, you can expect it to behave this way. Once again, when it is in an unhealthy environment, you cannot expect it to be this way. But what you can do is identify that it is unhealthy, and therefore you will not be participating. The trader that can do this is the trader that will reach very high heights. Key takeaways, key notes from areas of value. Okay, they help us identify healthy opportunity. They highlight opportunities to participate in, and they reveal unhealthy opportunities to avoid. Okay, and one of the key things from this, guys, now that you understand this, you no longer ever have to FOMO into a position. Okay, if you miss this entry right here, okay, say price comes up, you identify your area of or your GBI right here, okay, and you miss this short play, okay, say it happened too quick. Once again, your dog was vomiting on the floor, you had to pick it up, okay, you missed it. That is fine. All you need to do is identify the retest and trade off that. Josh, I missed that one. Okay, that's completely fine. Identify another green candle that's ignored. Wait for the retest of that one. Oh, Josh, I missed that one. That's okay. Identify the next one or this one, okay? Once again, guys, in healthy market conditions, this is going to continue to happen. And it's the most beautiful thing in the world. You guys understand how much money you can make when this is happening? This is your key to becoming a confident trader, because this is how the market operates, okay? This isn't based off luck. It's not based off emotion. It's based off market structure and the pain of large money stomping out of their positions, okay? It's key, it's critical, it is crucial. Instead of FOMO, choose to wait for price to return to the area of value and identify who is controlling it. Trade with them. Don't be the FOMO guy, okay? Don't be the restless, anxious, irrational, emotional, unprofitable, inconsistent trader. Become the trader that trades strictly, stringently, confidently, okay? The trader that can control himself. And it's not hard to control yourself when you understand the area of value. When you truthfully understand this concept, I believe you will never FOMO into a trade again. Dead serious. It doesn't make sense to. Why do something that doesn't make sense? And it literally, now that you have this information, FOMOing doesn't make sense. Because if the market is in healthy market conditions, it will come back to the area of value and you will be able to trade with it. Trading AOV puts us in a way more reactive state versus rushing into setups that we are unsure about. So pro tip, sometimes playing defense is much more effective than playing offense. Areas of value show us who is currently in control of the market, and they allow us to take setups with great risk-reward ratios. Guys, this concept, this principle, this area of value, right? I'm sure there's different names and terminologies for it, and you guys will post it in the comments, and that's fine. As long as it keeps you from FOMOing into bad trades, as long as it clarifies this intense market, okay? And it's not always going to be picture perfect, but I promise you this. I trade this way every single day, okay? I'm able to identify great setups doing it, and so is my team. Learn to identify these key levels, and your life's going to change forever. I hope you guys enjoyed this mini course, okay? I put a lot of work into it so that you can become a confident trader, so that you can take yourself to that next level, and you could stop trading with mass emotion. I'm Joshua Salvetti. Like this, share it, send it to somebody that needs it. Guys, and I'll see you in the next lesson.